Welcome to the 2024 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this edition, weekday edition. We continue to look at news coming out of different conflicting central banks. Some are keeping rates unchanged, others are raising rates, some are pausing rates. And now Turkey and ECB in Turkey, they are looking up for a new tightening strategy after signaling a pause to hikes. The country's central bank sent a directive to lenders effective Friday, instructing them to put parts of the required lira reserves, that's their currency, into blocked accounts. This puts loan rates up higher and cut the sizes of banks' loan limits. Now, as you know, that Turkey, the lira has crashed a couple of years ago, about 2 years ago. Turkish lira crashed, and they had a currency crisis. So now some banks, quote, have stopped lending. Some banks even recalled the already granted loans. This is going to cause further liquidity squeezes, says one Istanbul-based economist. He told CNBC this. Now, this is going to be continuing to be interesting because Turkey's central bank is opting for a different monetary tightening method as it grapples with climbing inflation after previously signaling that its rate hiking cycle was over. Could this be the path? I want to ask a question here to my audience. Could this be the path that the United States and the European Union, European Central Bank follow, and other banks follow if the inflation does not get under control this year or next year? They could say one thing. They could say, "Oh, we're going to be thinking about cutting, and we'll let market conditions dictate that," quote. But then, if they don't see these market conditions improving, could this be something that we could be experiencing over here in the Western world very, very soon? Now, that pushed loan rates up higher and cut the sizes of small bank loan limits, with some lenders shrinking their commercial loan limits to 100,000 lira or $3,100. Reuters reported on Thursday. So it all depends on what the banks want to do. Remember, all of this derivatives, all of this debt has been carried by most of these central banks are being bought up. On one end, they're buying up the debt. On the other end, they're printing out more money through packages, austerity measures they call it, in these packages. And so this is what's going on. So we could see that here in the United States. Now, Turkish annual inflation, consumer price inflation, soared to 67% in February. It continues to rise here, and that's what's going to be happening. So it could be possible that it could be a liquidity crisis and not a currency or a debt crisis that most people are thinking, as the debt continues to climb above $35 trillion here, the U.S. national debt in the United States. So it could be a liquidity crisis like they had in Turkey, in Greece, Iceland, Venezuela, Zimbabwe, you name it. So that could be the issue as well. So look out for that as well. Palm shops know something about the U.S. economy that Biden doesn't. Times are tough. So let me know what you think about that, guys. I'll talk to you very soon.